Hey guys, welcome back to Success Seekers, Jesse Invests. We are going to dive in today into a new topic for this channel, which is options, writing covered calls and cash secured puts to what they call wheel a stock to earn extra income. Kind of like dividends, but this can be a little juicier with a little bit more risk, but this is something I'm excited to talk about. So go ahead and hit that like button down below and that subscribe button if you are new. 97% is what YouTube says that my viewers are that aren't subscribed. 97% of you guys watching are not subbed. If you can sub down below, it helps this channel grow and reach more people and just helps me out more than you can imagine, guys. So let's dive into it. In my Roth IRA, we are at 7.5K. We are at an all-time return of 9.70. And part of this return has been led by extra income from generating premium from writing options. If we go over to my IRA options tracker, I made a little tracker for this. I have actually been writing option contracts on Ford, my 100 shares of Ford in my Roth, since March. In March, we can see that my 100 shares of Ford was valued at $1,300. So I was using $1,300 of capital to wheel options on Ford. And the premium profit I generated in the month of March was $46.79, which was a 3.6% return on my capital. Now, let's say we could do that every single month. 3.6 times 12, that is an absolute insane return on the investment that beats the S&P 500. 3.6 times 12 is 43%. We would see a 43% return on capital in a year if we managed to do what I did in March every single month. Now, 3.6 is extremely high, and you can't always expect to get that. But if we look at next month, April, I earned 4.5 with $58.88. And in May so far, we're only on the 6th, but I've earned $10.97, almost a 1% return on investment. Now, my goal each month, guys, is just to return 1%, because if I can do that 1% or more every month for 12 months in the year, then my wheeling has earned me a 12% return. The S&P 500 returns an average of 9 to 10% a year. So I will out-earn, my capital will outgrow and make me more money than the S&P 500 if I can keep a 1% or higher return per month. So we are already at 0.8. So writing any contract after this one expires on the 10th will get me in that zone. So this is really achievable, really doable. Super excited that we are already at 3.6 plus 4.5 is 8.1 combined with May's 0.8. We are already at 9% return on our investment since March. Now, the latest one I just wrote was at $12.50 each, expiring this Friday for 11 cents. And that's multiplied by 100, so you get $11 minus a small fee that the brokerage takes, a 3 cents fee, so I earned $10.97. And to break that down for you guys, if you're still watching and you have no idea what options are, this means that I signed a deal, a contract, where I said, hey, if Ford closes, where is Ford? If by Friday, May 10th, this Friday, at 4 p.m. when the market closes, if the price of a Ford share is at $12.50 or higher, like $12.54, $12.58, it could be $13, it could be $15. If this stock on Friday at close is $12.50 or higher, you can buy my 100 shares for $12.50 each. Now that's a great deal for the other side of the person on this contract, the other side of the person on this deal. Because, you know, if it closes at 12, let's say it closes at freaking $14, it costs them $14 to buy a share off the market. Well, they can buy 100 shares off me for $12.50 each. They're saving a lot of money. So to get in this deal, they pay me, the person on the other end of this deal pays me a small amount of premium. In this case, for this contract, the premium was $10.97. They paid me $10.97 to get the right to buy those 100 shares off me for that $12.50 price on 5/10. Now, how I win in this deal, there's two scenarios, right? I guess there's how I win and how I lose in this situation. The best case scenario for me is that on 5/10, on the 10th, on Friday, if the market closes and the price is under this $12.50, if we're looking at a price like this, $12.42, or literally anything, even 1 cent cheaper than $12.50, the contract expires. The deal is closed. Worthless. I keep that premium that the guy on the other end of the deal paid me. I keep $10.97 in my account to buy more forward, to buy in other stocks, like a dividend. I get to keep that premium regardless of what happens on both sides, actually. But in this situation, I keep my 100 shares, nothing happens, nobody's the wiser, it's like nothing happened from the week before, except I'm paid that premium. I get to keep my stock, and then write another contract on it if I want. Now, on the other end of things, if after I take this $10.97 premium from writing the contract, what if it closes at above $12.50? Then my 100 shares will get automatically sold away, called away. It'll automatically sell my 100 shares of Ford I own at the price agreed upon in the deal, this $12.50 right there. Now, this can be good or bad depending on the contract you write. You want to be smart. If I had written that price in the deal at $11, that would not have been super smart because the price is $12.42 right now. The odds of it on Friday being more than $11 is really high. And also my average cost of those 100 shares, I paid $12.50 each for those shares. So I would be losing money if I sold them all the way at $11. I'd be leaving a lot of money on the table. I would lose a lot of money. So because my average cost is $12.50, I spent about $12.50 on each of those 100 shares I own. I want to write it for, $12.50 or $13. So I wrote the contract for $12.50. So in this worst case scenario that the price closes above $12.50 and I have to sell my 100 shares, it'll automatically sell them for $12.50, the price that I bought them for. So I simply sell them for what I got them for, and I'm in the profit because I break even doing that, but I keep the $10.97. Now, where it gets tricky is when the price, you might be thinking, this sounds great. It sounds great. You're making like huge returns, massive dividends in the form of premium. Why don't I do this? This is great. Here's where it can get rough. And I'll give this quick explanation before we really close out the video because that's it. I've made $116.64 so far in 3 months. I've made almost 9% return. Everything's great. I'm excited to keep you guys updated on this and let you know where my income is at and how it grows with dividends, with the premium, I mean. But before I close, I will say one thing. Let's say my average cost is $12.50 for each of my 100 shares here, and the stock price is at, let's say it's really low, right? Let's go to last year. Let's say the stock price is trading for let's use $9.70, but my 100 shares I bought for $12.50. That's when it really starts to cut into your profits. So you want to pick a stock to wheel that is not known to suddenly drop in price, is not super volatile, stays around the same price over time. But that is something to look out for. Your premium may get cut into, or your capital lowering in value when the stock price drops pretty dramatically. But that hasn't happened yet for me, and I will keep you guys updated when it does happen to show you how I handle it. Thanks for tuning in, guys. And yeah, I think that's all. But tune in next time and let me know if you guys like little option updates.